Welcome to Real Estate 360 Live with Ryan Sloper, the trusted name in real estate radio. Now, here's Ryan Sloper.
Welcome back, everyone, to another episode of Real Estate 360 Live. For those of you not familiar with our podcast, we do a podcast each and every week to bring you all things real estate, not just real estate, the economics behind real estate, what's driving the economy from interest rates to what the Fed's making decision-wise. We have another big Fed meeting this week, which will potentially push mortgage interest rates up or down pretty significantly. They typically do every Fed meeting. We'll also talk about Congress and all the different things that are out there that play a part in moving the real estate market one way or the other. Obviously, markets are very hyper-local, so we're going to have anomalies throughout the country. We will talk sometimes in terms of nationally what's taking place, but obviously I'm located here in the D.C. metro area, and it's going to be a little bit different than the rest of the country, but we're trying to give you, a bird's eye view of what's actually taking place, breaking down what's being put out there in the media, and actually give you the real facts of what we believe is going on and where we're headed. Joining me on our panel, as he does each and every week, is Louis Camerosano. Louis is a former school teacher, a former attorney, and a former general manager of a major real estate portal. He's been cited in the media as a real estate industry expert in the Forbes, Wall Street Journal, Fox Business, U.S. News, MSN, CNN, MSNBC, and numerous others. Louis, how you doing today?
Splendid. And you?
Can't complain. Just
Good.
Another day. I remember from the last time we talked, we basically had said, came to the conclusion that there was not much that was going to change between now and who knows how many years, 5, 10, 15 years. They can continue to push.
At least that was the plan.
That was the plan. It looks like that this is just like going to be the endless pursuit of chaos, apparently. But I wanted to get your take. Obviously, we've had a lot going on over the last week. We've now got potential sideshow distractions again with Iraq again, and potential war and conflict breaking out over there. The U.S. has kind of obviously came out and said that they're going to do their part, but it's their job to kind of handle things on their own. It's funny how we have that
took them 10 years to figure that out.
Right, it took them 10 years to figure that out, and how much money did it take us to figure that out?
And lives.
Right, in lives. So now it's like we've completely reversed our stance on how we're going to handle that. So we have that taking place. We do have the big Fed meeting this week, which I believe starts tomorrow, and they will issue, obviously, I believe that their policy on Wednesday. I want to get your take on, obviously, what you think Yellen is going to come out and say on Wednesday. If it's going to be just a continuation of the taper of quantitative easing and continue down the same path that we've already been on. I want to get your take on that. And also, obviously, we've had interest rates, which I've been talking about, have been held in a holding pattern for quite some time. Interest rates are still at pretty much all-time lows. We're not seeing the type of pop in the real estate market that everybody's been expecting. There's actually supposed to be a report by the Financial Times, and actually they were claiming that about $29 trillion of money, a cluster of central banking investors, have actually become major players in the world equity markets, and that the official Monetary and Financial Institutions Forum is confirming that $29.1 trillion in market investments held by 400 public sector institutions and 162 countries are basically contributing to the overheated asset prices, where basically, since we have very low interest rate environment, even these public sector institutions throughout the world are now pushing money into equities because it's the only thing that they have to really drive any sort of rate of return. So even more, it goes really to show is that we don't really have any sort of sound economy, and it looks like there's really not a sound economy anywhere in the world at this point because everybody's pushing their money into equities, and really we know that there's no financial sound economic data to support this stuff. So I want to get your overall take on the economy. What is the Fed going to read into, obviously we know they don't really acknowledge much more than it's great that we have, high asset prices and equities, but what's your overall take in the way that they're going to interpret what's going on as far as employment, the stock market, and all these things, and how it's going to play out at the meeting for the next 2 days?
Okay, just a quick comment on what you mentioned about the boosting of asset prices, stock market prices via public sector companies buying equities, and you just add on to that the companies themselves buying back their own shares. We mentioned last week or 2 weeks ago that the S&P companies themselves are the largest purchasers of S&P company stock. So basically, it underlies the concept that the companies themselves aren't necessarily doing well, but their stock price would indicate that they're doing phenomenally well, and that's just a function of the fundamentals of the company being decoupled from the stock price. So the company is doing okay, but the stock price is doing phenomenal, and because of that, there's a difference between the return you can get in the stock market and the return you can get saving money. So you throw it towards the companies that look like they're doing well and will continue to do well. And as you and I mentioned, that dynamic can keep on for a while, and that's kind of what they're counting on, is not boosting the underlying economy, but boosting the reflection of what the economy looks like by boosting asset prices. And, of course, all that has the result of creating wealth for those who own assets. And if the companies aren't doing well, then they're not hiring people, and it harms those who don't have assets but only have jobs or want jobs or have savings and want savings. So this whole dynamic, as we mentioned at the beginning of the show, Ryan, is designed to keep pushing. They have no other solution but to push asset prices higher, and they seem to have a lot of tools at their disposal to do so, with the low interest rates, the negative interest rates, the boosting of stock prices, the boosting of housing prices. And as we mentioned, there's a limit to how high you can boost housing prices because you still need loan-to-value ratios, you still need a job. But equities, you can continue to boost them higher and higher and higher, and they can do stock splits, and no stock becomes unaffordable, so to speak.
Right.
So it looks like that's what the game is. Now, as to what the Fed's going to do on Wednesday, as you know, I put together every week or so a combination of what the Fed Reserve presidents are saying in their speeches, and the theme seems to be, in the most recent one I'm going to put out later this week, is the Fed's taking their victory lap. They're insisting that tapering and ending the $4 trillion QE program, because the economy is recovering, they've hit their unemployment target, they're near their inflation target, they just don't have enough inflation yet, but they're hopeful, they're going to get that. They're sticking to their story, even though the economic data doesn't support it, Ryan, but that there's a recovery. And indeed, some of I think it might be Fisher, Dallas President Fisher, is saying there's even talk of ending QE early. Kind of, early after 5 years and $4 trillion. I like the way they said they're going to end it early. I guess they mean early according to the most recent yakking they've been doing about shutting down the program. But it looks like, and they are saying that the job market is improving. Initial jobless claims are, they're around 300,000. Somehow that's an indication that more jobs are being created. The inflation is starting to pick up. Hooray for that. And with the ECB going to negative interest rates, the Fed now has some wiggle room to end this whole program, claim victory, and as you mentioned last week, say, look how good we are. We've got a little bit of that inflation. We've got lower unemployment. ECB is behind us. They're going to have to probably institute the same type of policies we had. They may even have to do QE, but if they're lucky, they'll get to where we are. So I think that the meeting on Wednesday will come out with a further taper, maybe even increase in the taper, and some forward indication that, they're ready to close this thing down definitely by the end of the year. Yeah, it's all nonsense, but it's good that they're shutting down the program, but the rationale for shutting it down, that the economy is improving and they've done their job, is not true.
Yeah, I agree with you. It's always, you believe pretty much what we should actually assume is actually opposite of what they're telling you most of the time. They've finally gotten somebody else to pick up the slack for the purchasing of Treasuries and mortgage-backed securities. So, yeah, they can feel free now to wind down their program because they have somebody else to pick up their slack. If they didn't, then they couldn't unwind it because who would be the buyer of these things? And
I raise the question around who actually is the buyer. We've talked, and we have blog posts on smallgold.com speculating who it might be, and it all points to some buyer or a combination of buyers out of Belgium. Some suspect that's the Fed themselves funneling money. We've talked about how it's European Central Bank and banks in Europe buying them, front-running the decision to for Europe to go negative. Who knows who it is? But the point is there is a mystery buyer of massive amounts that's suddenly emerged that takes the place of all of the purchases that the Fed was making, and that just doesn't sit straight. It doesn't make any sense.
Yeah, and when I was thinking about the other day, they always talk about how they haven't hit their inflation targets as well. And it's funny because if they do hit their inflation targets, Louis, mortgage interest rates should actually jump through the roof because,
of course,
for bonds, inflation is the arch enemy of bonds. So
right.
If all of a sudden we had this huge inflation, if they want to recognize the inflation, because we do have inflation, they just don't want to recognize it. They strip out all the important factors and then say that we don't have it. But
food,
it is
energy, housing, all up
exactly.
double digits.
All the ones that are the most important. I mean, how are people driving to work? What are they eating when they come home? I mean, these things are like the basic necessities. So we want to strip that out. But if they did recognize and say, you know what, we have this inflation, then all of a sudden we would see a major pullout of bonds and mortgage-backed securities, which would actually hurt mortgage interest rates. Well,
but that's why they're going to always say we don't have enough inflation, and they'll keep the inflation official number low.
And they have to keep their language, because people read so much into their language, they have to keep this language very tight so that they know that they don't have some sort of spike in interest rates, as they did one time when Bernanke opened his mouth when nobody was expecting it and shot interest rates up almost 0.5%. So
you're referring to the time when he said the economy is weak and that if we were to raise interest rates, they would go through the roof, and therefore, he's not going to taper. Is that what you're talking about?
Yep. So, I think that they know in order to do this, to pull out completely of QE, they have to have another buyer of Treasuries and mortgage-backed securities, which they do. They have to keep the inflation talk down, that there isn't none. We actually have nowhere near the amount, so that the mortgage interest rates will naturally stay low. People will be well-positioned to continue to invest in these same bonds because they don't feel like there's a threat of inflation and hurting their investment. So they won't start pulling out of that. They'll keep mortgage interest rates low for an extended period of time, which that extended period of time, you and I talk all the time, Louis, it's not on Obama's dime. So through his presidency, and as we spoke before, it looks like through Hillary's presidency, it's going to continue.
And the impact of that, Ryan, is where do you put your money? You put it back in the stock market and in the housing.
It's the only option you do have, right? I mean, you don't have people that are on fixed budgets and can't put money into a CD and make like 3 to 4%, which would be something that they could potentially live on. Now they have to put their money into the stock market because their friend told them, "Hey, look what my financial advisor got me. He made me $20,000 this year." So
the stock market goes up every day, Ryan.
Absolutely.
On good news, bad news, no news, it just goes up. And that's just because they're not dealing off of fundamentals. They're dealing off of how much cash there is, and it all has to end up in the stock market, so it just buys stocks. It's a supply-demand thing.
And, it was that same article that I was talking about, basically the world's largest public sector holder of equities. And in this article that's supposed to be published this week, it says that it's China's State Administration of Foreign Exchange is the number one holder of equities, and close behind it, they're basically suspecting that the Fed is the number 2 position, which I find very interesting. But, when we're forced to keep, pumping and pumping and pumping, at a point, something's got to give. We keep saying that, obviously, well, when is enough, and when do we just start putting our money in there? Because obviously it hasn't come down yet. There's something brewing. I just don't know if it's some sort of world event that's going to take place. But there's somebody gets mad at somebody, and then all of a sudden money gets pulled out of something. I mean, they have such massive control over the market that it's unheard of, Louis.
Well, it is the market, Ryan. I guess you and I have been looking at what's going to happen when the market takes over and market dynamics come into play. Well, it seems like they're increasing their grip on the market so that doesn't happen.
Yeah.
And the companies are more than happy to go along with that because they know that if regular market forces were to take over and reflect the underlying value of their stocks, the stocks would plummet and their stock options and their bonuses would be less. So they love the fact that the stock prices are rising even though their companies are doing not that well. So the market has been taken, basically been put into the hands of the Fed. And the problem with that is most people are not complaining. Like, well, that's good. My stocks are up. My 401k is up. My IRA is up. My home prices are up. So even though nothing has improved in the underlying economy, you don't have an increase in production, you don't have new jobs being created, you don't have economic activity, you just have rising prices. And that seems to act as a sedative, very powerful one for people. It's like a drug. You're not cured, but you've been feeling better, even though you're terminally ill, and they've managed to keep you alive feeling better for a period of time. That actually substitutes an alternative reality. It's like, well, if what I ought to do is live long and feel good, that's what's happening. They've pulled this off for 5 years.
Yeah, they have. They've pulled it off for 5 years, and nobody.
Who's complaining?
Yeah, nobody.
You and I are complaining.
Well, you and I are complaining, and we're the ones that are questioning everything that's going on. Nobody else could care less to question it, right? It's like, well, what do we care? The stock market's up, and the irony is,
and it's been up, and you guys have been talking about it's not justified, it's fake, it's going to go down. Well, it hasn't.
Well, if the average American, if they're the only way that they measure how the economy is doing is if their retirement account, their stock portfolio, whatever it may be, and their house,
and their home is up.
Yeah, they would feel that the economy is improving. The funny thing is, though, is that you would think that if we had all those indicators moving in the right direction, that we would also have employment, which was way up. We'd have
you're thinking too much, Ryan. No,
I know. Well, we'd have wage growth that would be through the roof.
Forget that.
We'd have hundreds of thousands of people lining up to buy houses, like the last house.
Oh, who cares? As long as my house is higher.
Right. So it's I guess it's better off to be dumb in this situation, is what you're saying.
Absolutely. If you've been dumb the last 4 years and you believe everything they've told you about the improving economy and the recovery, and you didn't have recovery fatigue and you believed it all, and you just left all your money in the stock market, you made a lot of money.
Yeah, and I guess there is a side benefit to this. If one has enough money in their retirement accounts or stock option accounts that they can finally cash out enough money where they can essentially pay cash for a house or something like that, then it could be, but it's doubtful.
The lucky ones are the ones who already had money, not... See, that's where the people with no money are actually smarter because they see what's going on. They see there's no recovery. The people with money, they're not paying attention. Their critical thinking is off. They've been told there's a recovery. They see it in their stock portfolios. They see it in the prices of their homes. So they treat the people who don't have money as being ignoramuses because they don't get it. Why don't they go out and start a hedge fund? Why don't they go out and borrow a few $1 million and buy houses like they're doing?
Yeah.
I mean, are they stupid or something?
Well,
I mean, that's kind of what this creates. It creates a mentality that you got to be, out to lunch if you don't see this recovery because look how much money I'm making. Look at my stock portfolio. Look how many homes I have.
Right.
Can't you do this?
Well, we don't hear anybody really talking about, hey, guess what? I got a raise. Guess what? I got a promotion.
No. My company just exceeded sales, did tripled sales.
Right.
We can't hire enough people fast enough. In fact, we're resource constrained. We can't get enough materials because there's so much demand for our product. Now, this is the reverse of how an economy should work. What they do is they stimulate demand, not production, and then the stimulation of the demand results in people borrowing money to buy production that's been stimulated overseas in China. Yeah, and that will end badly when China eventually realizes that they have to revalue the yuan. They have a bigger market in Europe and a bigger market within China itself to sell goods to, and prices of exports to us become more expensive. And then what are you going to do, lend people more money to buy goods because they're more expensive? And that's what they've done with the recent Sallie Mae thing, is they realize now people aren't getting the return on their education debt, and they're not getting jobs, and they can't afford to pay their student loans. So what happens, Ryan? Oh, okay, we'll have to come up with, well, if you can't pay, we can defer your loan. They never hit the root problem. It's the same with home prices are too expensive, so they lower lending standards. They don't address the problem that maybe we shouldn't have all these programs to boost housing prices so high. Maybe we shouldn't have all these programs to boost education costs so high and guarantee loans. No, what they do is they push it out even further. They say, yeah, they're high housing prices, and yeah, the education you're getting isn't resulting in a job. But we're not going to fix that. What we're going to do is we're going to make it easier for you to get a loan to buy an overpriced house. And if you can't pay your student loan, don't worry about it. When you can pay, you can pay.
Well, I'm glad you brought that up because that was one of the talking points that I wanted to hit on today. And that is actually that with Obama coming out and wanting to. Well, I don't remember the exact terms of what he's going to get at, but something where they were going to have a payment equal to like 10% of what their discretionary income that was left over. It would be like a 10% payment of that discretionary income. Well,
and if you have nothing left over, you don't pay.
Right. Well, I guarantee you.
But Brian, that's a guaranteed loan by the government, which means the taxpayers are funding the non-payment of those loans.
Absolutely. And don't think for a minute, though, that it wasn't probably like FHA's idea, which is a government-insured loan, that basically said, hey, how come we're not getting near as many FHA loans anymore? Well, because guess what? Your mortgage insurance is through the roof, very expensive, so it's making it less affordable for people to buy a home with that type of low down payment loan, and they can't qualify because their student loan payments are so high that their debt to income ratios are so high that they can't afford to buy a home. So by loosening
you got two sets of debt killing you. You got your student loan, and then you can't get another loan. And instead of trying to reduce debt and reduce the concept that these things are overpriced because we've guaranteed the loans, they try to come up with a way where you can still get credit to buy overpriced homes, even though you owe so much money on your student loan.
Yeah, but isn't it ironic, though, Louis? It's like as things tighten and they see less and less people are actually buying houses, all of a sudden we're back in the situation, as I mentioned to you, that they're going to have to get creative and they're going to have to lower credit score requirements. Now they're loosening up student loan guidelines.
But that's not the way to go. It should be the other way. They should be trying to reduce the prices by pulling away the guarantees and letting the price of education come down because there's no guaranteed loans, and letting the price of homes drop so that people can afford them without having to have special qualifications because it requires less money to buy them.
Well, and I argue all the time that it's actually better for the real estate market in general for us to have higher interest rates because if we have higher
and lower prices because you'd have greater volume of sales.
And we'd actually have a private mortgage market that would come back. That's non-existent, mainly because the interest rates are so low. So you could actually argue that more people would be able to buy a home than right now at the low interest rate environment. And it's true. People think that it's counterintuitive to think that way because everybody thinks that just because there's low interest rates that everybody's going to get a house. It's proven that model doesn't work. It's proven. But
you know what real estate agents see? Home prices are higher. They say, well, I get a greater commission. What they're missing out on is with higher home prices, you have lower volume of sales, which means fewer real estate agents make fewer real estate commissions, and because there's fewer sales.
Yeah, and it's
everyone
funny
thinks
because
we've been conditioned, Ryan, to think rising home prices, that's a good thing. But we haven't been conditioned to think rising gas prices, any other gas prices, food prices are a good thing, but somehow cost of shelter is a good thing because once you own it, you're a cheerleader now for the home prices to rise.
Well,
but people don't buy more when prices are higher. That's why companies have sales. If you think about it, Ryan, inflation, they keep saying we need more inflation to stimulate the economy. Higher prices choke the economy. You don't buy more when they raise the price at Walmart or Target. You buy less. Companies try to stimulate sales by lowering prices. This to me is insanity that all the monetary and fiscal policy is designed to try to get more inflation because they think it's going to stimulate the economy. When people don't have jobs and they don't have wage growth, higher prices means they buy less. But the solution here is, well, we need more inflation, and if we don't get it, we'll just loan them more money. At low interest rates, mind you, at low interest rates. Oh, and you don't qualify for the loan? Well, we'll reduce the lending standards. They're going every way in the wrong direction.
Yeah, the solution has always been, well, let's find out how we can lend more money, right? How we can.
That's probably exactly. I think that's the sign when you enter the door of these meetings is how do we get people to borrow more money?
Yeah. It's crazy, but that's what's been taking place for some time now. And the funny thing is that they all approach it as if, this is going to be the next greatest solution, right? We're gonna be able to get more money into the hands of people that need it. And at the end of the day, it only flows to the rich.
And the way you get more money into the hands of the people that need it is you create more production and more jobs so that they have more money, and that the companies do better and they hire more people and more goods and services get produced and people have the money to buy them. Not the cart before the horse. You just give money to people or you lend money to people so they can buy stuff that's not even made here.
Yeah, and I think we've talked about this before, Lewis. Is that overall the overall attention of what we think is important from the Fed and the president and everybody else. They all think that it's really just let's just focus on keeping the stock market propped up and keeping home prices rising. Well,
that's all they can do. You see, that's what they can do through monetary policy.
Correct, and then they can manipulate. They can manipulate, the guidelines for repayment of student loans. They can then switch up. Okay, the credit score requirements. I know we said 620, but now let's make it 550 because people can't pay their debt back, so their scores are lower. So let's lower that requirement down. And then let's
passes as economic wizardry. Like somehow these people are geniuses for coming up with that.
Well, and then we'll be talking 2 years from now why we have, almost first payment defaults on some of these loans, that people get loans that they can't even make their first payment because they were given money that they probably should have never been given.
Yeah.
It's a vicious cycle that just keeps taking place. And I think, your argument is, Lewis, it'd be much better off to have we need to really pay attention to, the tax laws and allowing the rich to probably bring their money back from overseas with no penalty, for them to consider investing back in America. I mean, we talked about the natural gas and oil play that's out in the Midwest that nobody talks about because it's funny. We have all this supply of stuff out there, but nobody wants to pretend like it's there because that would actually make the United States somewhat productive again. We don't want to talk about that.
In fact, they actually want to trump that down on environmental grounds, and part of the reason is if the oil industry or the natural gas or the resource industry in the United States gains that level of economic prowess, it removes a lot of the power from central banking. They don't want that. They want to be in control of the economy. They don't want the mass production of goods and services and natural resources to drive the economy. See, look at it this way. It used to be if, let's say, the industrial base drove the economy. Well, what happens when a group or a segment of the economy grows strong? They gain political power. Well, industrial power is zero in the United States. In fact, it's owned by the government. Right? General Motors doesn't have any clout at all. And they like it that way because now they can decide what to do with General Motors' debt. They can decide all kinds of policy reasons based on what they're going to do with General Motors. But if you had an independent resource sector in the natural gas or the oil sector, that poses a threat to central banking because then they have a seat at the table as to how the economy and how public funds get allocated. So they don't want that. Takes away from their control.
Well, it's always been a complete control thing, and it's from healthcare to the housing market to the stock market to every market that we possibly have. It's completely controlled.
Right, they control those. You're absolutely right. They control the housing market, which is a big segment of the economy. They control. You mentioned the insurance market, the banking market. I mean, what's left?
We're socialist pushing communist at this point as far as the reliance of people and business.
On the government for their livelihood. And then there's also the government sector, just plain government, not related to housing or related to banking or related to insurance, but just people that actually do tasks for the government.
Yeah.
Federal employees, there's millions of them.
And what happens to businesses that are actually like new startup businesses, Lewis, that actually find loopholes where there's no regulation by the government? Within a year, they're most of the time put out of business, right? Oh, you thought you were going to get slick and you were going to put one past us, huh? No.
Unless you're going to go into the public markets where the banks can make money selling your shares to the public, you're not going anywhere.
No, you're not going anywhere at all. you talked to earlier, Louis, about rising home prices, and I know you did a blog, I believe it was last week, talking about home equity loans, right? So it's not enough that people are just getting, they're gaining equity because home prices are rising, but typically when that happens, when we're in a fantastic economy, when things are moving in the right direction, people would just be happy with leaving that equity there. But it's proven through the amount of home equity lines that have been taken out that people are jumping at the chance to pull as much equity out of their house as soon as they can.
What do you think they're doing with the money?
They're paying their credit card bills with their home equity loans.
Right. They're doing it because they have to. It's not because they can either do that because they need the money, they need to pay off their credit card, and this is a nice way of doing it, or they're actually wealthier and they speculate because they can make even more money in the stock market than the price appreciation in their home. Neither of that is a good thing.
Nope. Yeah, I mean, if they can borrow it, and let's just say it's at 3 or 4% interest rate, and they can throw it into the stock market and try to make 8 to 10%, you got an arbitrage situation. Yeah,
right.
So, and what does that lead to? A ton of malinvestment, right? You're going to be throwing money in there.
You're just piling on to already what you mentioned, the public sector money and the companies themselves buying stock. You're just adding to a false sense that the economy is doing well and that the stocks are doing well.
Absolutely. I mean, it's just continuous. It's just a continuous cycle. So now all of a sudden people have all these home equity loans,
and they love that because now there's what they call the type of economic activity that they profit off of.
Yeah, and then what will happen is
borrowing and spending.
But let's see. So the Fed will probably not touch the Fed fund rate for at least another 2 years. So home equity lines are based on the Fed fund rate, and banks typically add 2 to 3% on top of that prime rate, and that's what you get to pay monthly, depending upon what your credit scores and stuff are. Obviously, they could be higher rates. But so they're paying very low interest rates, and they will for some time. But at some point when the Fed fund rate does go up, that's when everybody got caught the last time because they couldn't afford to pay the interest on these loans, and and then all of a sudden their investments aren't doing as well as they thought. Well,
what happens if the price of the home goes down?
Yeah, then they're in a situation where they're crying wolf again, and they don't want their home anymore, so they're trying to short sell it or let it go back to foreclosure all over again.
And now they have a higher level of debt. They'd begun to pay down the mortgage. Instead of paying it down, they borrowed more money against it, and then it goes underwater again.
Well, I mean, I don't think we've ever seen a point in time in history in the United States where we've had like these same almost the same thing happen in like a 10-year span. Like it's literally you did not learn from what you just did 5 years ago. You know what I mean?
Right. The only difference I point out in that blog post is last time it was so widespread. It was Main Street's bubble and crisis. This is all Wall Street and at the top levels, the more wealthy.
Yeah, I mean,
because you don't have the mania over homes. We're not selling. We're selling a third of the homes we used to, and even less of the new homes. So people aren't participating in the same. There's no liar loans, ninja loans. There's not the average guy or gal out there buying and flipping homes and pulling money out of their homes. It's not as widespread.
No, and I will say that obviously as I talk to the top,
which is worse, by the way, isn't it, Ryan? I mean, if you're going to have a bubble, let everyone participate.
Yeah,
don't just create these things just for the rich.
Yeah, you got to be fair.
Trickle down bubble. That's what we want.
Well, you got to be fair. This is the United States, right?
That's right.
Money.
Well, that's what it was. The original housing bubble, Ryan. That's exactly what it was. There was nothing stopping anybody from going into a mortgage broker and grabbing $400,000 and buying a home on no income or $20,000 income.
And honestly, like if
can't let that happen again.
Well, yeah, they would be taken to the woodshed, I guess, if they created these creative mortgage financing options, which were around last time. See, this time they're just saying, hey, we've got cheap money available, but we can't really tell you how to get it. You know what I mean? Like, it's hilarious because people all day are saying, will come to me and be like, what kind of programs are out there to help me? I don't have any money for a down payment, and my credit's kind of banged up. But I've heard that there's some programs out there, and it's almost comical. It's kind of sad at this point because I'm like, well, that's what people have been trained to think is that these loans are available for everybody, and the reality is that there's more loans being turned down today than ever.
And you find it hard to laugh at those people, but 30 years ago, that's ridiculous to even think you can come into a mortgage broker's office and say, look, I don't have a job. I owe a lot of money on my credit cards. I have bad credit, actually, and but I still want to buy a home. Where do they get the mentality that somehow they would be able to get a home? And that's only from the last 10 years when they were able to.
Well, not just that, Louis. They'll come in and then they'll say, and by the way, it's been kind of tight, so we missed last month's credit card payment. Is that going to affect? And by the way, we haven't been able to pay our medical collection, so that may be on that report too. Well,
yeah, but I heard there's a program for people just like me, and that's the problem. Is people are conditioned to think that, look, there's no way they can get ahead. They've created a system like this, and the government's always told them, "Oh, that's all right. We'll hook you up because you vote for us." That's the danger. Is you create an economy where if you expect the government to give you everything, then they can also say, "Well, we don't have it anymore to give you."
And that's the whole entitlement economy that we've created. Yep. I mean, they're trying. You know what they're waiting for, Louis? They're waiting for the next person that's going to run for president to come out and say, "Guess what, guys? We're going to double down on food stamps. You're now going to get double the amount that you were getting last year." Right?
You know what? You can't do. You can't. Look what Romney did. He came out and he said, "Look, this, I don't know, whatever percent, 47% of people that are always going to vote for the handout. Well, by the next election, it's going to be like 58% of the people that are always going to vote for it. What they want is it to be like 60, 70% so that no one can ever challenge them."
Yeah, absolutely. But you know what, Louis? Politicians all lie to begin with. So if a Republican was actually smart, they would actually come out and say, "You know what? We're going to increase your food stamps by 25%.
Just get elected and then turn around and not give it to them.
Exactly. Just get elected, and then you can change policies just like every other politician has. But that's their only chance of winning, Louis, because guess what? Those people that are receiving benefits from the government, whatever type of benefits they're receiving, they are scared that they will lose them, so they'll vote for the candidate that they know that they won't lose them. And those people, when they come out and vote, those people are the people that didn't vote 10, 15, 20 years ago.
Right.
Now,
well, look at what
Obamacare
Obamacare has done. Even people that are violently against it, many of them will find themselves in positions where Obamacare will actually benefit them, just like people who are against Medicare, people who are against Social Security. But at some point, even if you were against it, once you start to receive the benefits from it, look at, for example, people who consider themselves conservative, limited government people, and then they're like, hands off my Social Security.
Right.
Then they won because they basically got you to be relying on. Now, they did take your money, and there's an argument that, I paid into this, I should get my money back. But the point is they're defending, they actually catch them in the hypocrisy of it is you were against all these programs, and now you're benefiting them. And, of course, once you benefit from a program, when you're in the prison, you eat the prison food. You don't say, well, I don't belong here. I'm not going to eat.
Correct.
And that's how they maintain the power is by offering programs. You can be against them, but once they're in, then you start voting for, if you think about Republicans all through the 70s, they were going to defend Social Security. When they were the ones in the 30s that were screaming and yelling it was communism and it was fascism and it was a takeover and so on, it will be the same with Obamacare. Will be a conservative issue 10 years from now because someone will try to change it and take away a provision where you're not going to get your benefits.
Right. Yeah.
And that's, Social Security isn't just a Democratic left-wing issue. Republicans support Social Security.
Yeah, and speaking, I brought up a bit of politics into this, but did you see, I brought up before, it was my economics professor, David Brat. Remember I mentioned him before? He did beat Eric Cantor in the primary.
Oh, that's right. That's right. That is your guy.
Yeah, that's my guy. He won, and actually they kept drilling him. They kept trying to pigeonhole him into being part of the Tea Party, and I remember having a conversation with him on my radio show a couple of years back, and a lot of his views I thought were very democratic.
Absolutely. I remember, Ryan, you telling me the arguments you had with him. He was not a free market economist from my recollection of your description of him, but they've painted him out to be as some type of Ludwig von Mises, free market, anarcho-capitalist, Murray Rothbard, Ayn Rand, all wrapped together. But I remember you telling me you having a very rational discussion with him where he was all in favor of a lot of government intervention into the markets.
Yep, and now he is primarily focused on the Constitution and many of the other things that would, be labeled very Tea Party-ish. And he won that election. But you know what? He won that election the same way that Obama won. He really took it grassroots down there, and he had a lot more money than people thought because Eric Cantor had the NRA and a bunch of other.
We had $5 million. I didn't remember that was your professor.
Yeah, that was my economics professor that won that election.
And that was the economics professor you were painting almost as Krugman-like.
Yeah, it's funny. I mean, people,
We've got to pull up that show and that interview with him.
I know. And, the funny thing is...
Do you still have that one? Because that was before I was on the CBS radio show. That was when you had him during your show on the radio before I joined.
Yeah, it was, I want to say it was probably almost, 3.5
2011.
years ago.
It had to be before I joined.
Yeah, I'll have to check and see if I can dig that one out. I'm sure I might have it on a CD. But, yeah, it was so funny because I remember listening and having that discussion with him that day. And, it's funny how far, he's come in 3 years. But you know what? They told him the only way you're going to win this potential election is this is what you're going to do and say. And people conform to that. I'm pretty sure one of his big backers is the CEO of BB&T Bank, which, you get the right money behind you. And they basically coach you up. I remember him calling me, originally and saying, "Hey, did you see the Huffington Post?" And I said, "No. What happened?" He said, "Well, it looks like they're putting me in against Eric Cantor." Like he was shocked that they were doing it. You know what I mean? And that's just how it takes place because somebody picks you out of the crowd and says, "You know what? I think you'd be a good person for this."
Yeah, so we can predict right now how he might be. He may be a massive disappointment to the Tea Party people.
Right. And, the funny thing is that I think that him winning this election, I think he'll win when it comes to the general election.
Republican seat, yeah. He shouldn't lose against the Democrats.
Yeah, he's probably not going to lose that seat. But I just, I thought it was really crazy. I mean, how they picked him out and literally almost in 6 months later he beat Eric Cantor.
Franklin Roosevelt once said, "Nothing in politics happens but for a reason." So if it happens, he says, you can bet it happened for a reason. Now, was this really a shocking upset, or is this some type of ploy?
Well, the funny thing was, I don't get to see the local media down there. It's a little bit further south from me. But they were all calling the election like Eric Cantor won it early on, right? They all said that he had won. And then
Tea Party is dead was the main talking point.
And then literally not even like an hour later, they come out and they say, "Oh, Brat won," and he won by a pretty wide margin.
10%. It was 55-45, right?
Right.
But you got to remember, right, there was the votes are like 29,000 to 19,000. They're insignificant numbers, 45,000 to 25,000. They're not massive numbers.
Yeah, and I think about this all the time.
One congressional district.
Right, and you know what? If he sticks to what he's talking about in the Constitution and all that, but the reality is, Louis, these candidates, like I said, you can do and say anything to get in there. And as soon as you get in there, you decide to go completely the opposite direction.
But so that you decide. Say you get hit from all sides from lobbyists. I think Ron Paul is the only congressman who ever voted based on, is this constitutional or not? And he would vote against stuff that everyone would just go along. Like, if you want to give a medal to Mother Teresa, congressional medal, everyone votes for it. And he says, no, the Constitution doesn't authorize us to give out medals. You want to give her a medal? Raise your own money and give her a medal. That doesn't exist in Congress. No,
and what is the media buried Ron Paul? Remember, like they don't want anything to do with him because he actually makes sense.
Well, he's representing the people, not some other special interest, corporate interest, media interest, whatever the interest is. He's supposedly acting in accordance with what a representative is supposed to do, is represent his constituents. And, of course, he gets criticized when he tries to get federal money for his district. Well, that's part of the process, though.
Yeah, and I mean, and then so you have his son, Rand Paul, who's out there. And
he's much more of a politician than all this, though.
Absolutely, because they basically told him, "Yeah, you're not going to win the election acting like your dad, right?"
No, absolutely not. And he's managed to play that game correctly.
Right, and so this is, and it's years in the making. So they have to kind of groom him along to get him to be, that potential Republican candidate. But
if indeed they don't want him to be the candidate. But they realize that if they're going to have somebody, and if that frame of thinking, the libertarian frame of thinking, gets far enough along where that's the type of candidate they want to make sure that candidate has at least the core principles that they have, that that politician is going to play along on the most important things and give lip service to all the other libertarian platitudes.
Right,
just to
exactly.
keep them happy, you know.
And regardless of whether it's a Republican or Democrat, the Democrat that ends up winning the next election, which I'm pretty much saying it's 99% Hillary, it's going to be much of the same. And we're not going to get anything different than what we already have.
We talked about this last week. You're not going to change things based on who the president is.
No, it doesn't matter. It's really irrelevant at this point. I mean, it's everything is so intertwined with the Fed and all the government programs that are.
You have to have a populist movement. There's a book by Ralph Nader. He's talking about the left-right alliance. I mean, that's dream talk, but that's the only way it would happen is where people join together and vote for candidates that represent what they call people interests as opposed to special interest and corporate interest. But the two major parties, that's not who their constituents are.
No.
And how do you fight that you can't get into presidential debates because it's a corporation run by the Democrats and the Republican Party, so they're not going to let in a guy like Ross Perot or Rand Paul or Jesse Ventura or Dennis Kucinich. Anybody who's kind of on the outs is not going to get a platform to even speak on the national level. And it's an enormous amount of work to try to fund a third party. You have to have like Teddy Roosevelt found it difficult. He was massively popular. He tried to come back in 1912 and run as an independent. He got denied the Republican nomination because they gave it to the incumbent president, even though he won all the primaries. So they have all kinds of tricks to keep out third-party voices.
Yeah, you brought up something funny back to me because as you're saying that, it takes a massive amount to fund these things, and it's like, Hillary can even get in and Bill can be in the White House and come out broke, right? She had that interview where she basically claimed that they were
like to be broke. Sure,
they were broke when they came out of the White House. I was like, where do people come up with this stuff? She said that like she was serious. I'm like, she was
trying to identify with her voter base.
Oh man,
I feel your pain. I was poor like you.
Yeah.
How can you? She might have been able to claim that as a child. I don't know her background, but you don't come out of the White House, her and poor Bill, cup in hand, poorer than anybody on the planet. Come on.
No,
and if they did owe money, it's because they had palatial mansions that they bought. And I don't understand where she would even come up with that story.
Well, no, she said, if you heard her say mortgages, as in multiple mortgages, what I mean?
That's your own stupidity.
Right. I mean,
even Donald Trump can go bankrupt, and he has. But that doesn't mean you're in the same straits as somebody who doesn't have a job and is going to be homeless.
Yeah, and the fact that you could even bring that up, you're trying to identify with your base, but it's absurd. I mean, like right after I can't even remember who was interviewing.
Well, she could ask her daughter for money because she made $600,000 at one of the. She was on like retainer or something at one of the news outlets.
Right, and they asked her like in the next follow-up question, well, you're making $100,000 speech now, and you made over $100 million, and she's like, well, that's pretty much better than getting into the corporate lobbying world where they're basically trying to. She's doing something productive, by giving. I mean,
it's funny. Honestly, people buy. I mean, Ryan, if you had people just in your normal conversation, she wasn't running for office, you didn't know who she was, and that person was sitting there, and you just knew her background, how much money, and she said that kind of stuff, she would be a pariah. No one would have anything to do with somebody like that. You see, this woman's she just makes up stuff, but yet. Right. She can say it, and people will justify everything she said. What she really meant was, I wish I had that kind of, anytime I say something stupid or that doesn't make any sense or it's an outright lie, that I have millions of people justifying what I said.
Absolutely.
There's no justification for her to say that.
Well,
other than a blatant attempt for politics to try to appeal to people that don't have money. She knows what it's like to be poor.
She's got a great platform to run on the next election, Lewis. It's basically, look, I was broke, and now look at me. Right?
Hey, what difference does it make is what she could say.
Right. But, I mean, it's just mind-boggling. I mean, obviously, there has to be somebody.
And it has nothing to do with her politics. It's just, she said that.
She did. And one thing about her is that she, no matter what she said or done in the past, she'll never fully take the blame for anything. She'll never recognize something for what it is. She won't admit to anything. It always gets, passed down to it was somebody under her command, but she won't take the full brunt of the process.
That politicians learn very early that the people below you are expendable.
Yeah, and never basically admit to something in the past. You know what I mean? Just say we must move forward from here, and that you can tell that's presidential.
But Ryan, wouldn't you love that? If anything, every mistake you've ever made, intentional or otherwise, you can just pass off on somebody else, or gets to a point. Well, that was 2 years ago. It's 5 years. What difference does it make now?
Only a politician can get away with that, Lewis, because any normal, average American that would do something, I don't want to give an example, but if somebody stole...
Well, you stole $10 million 3 years ago. Well, that was 3 years ago. Why are you bringing it up now?
Right. What does it matter? I won't do it again.
What difference does it make?
Right.
It's only $10 million. I was poor.
Right, and it goes back to the same thing as far as, these companies and banks and hedge funds, everybody else can basically make bad bets and do whatever they want because they know that they'll be bailed out. But the average American can basically run debt up to their, until they can't pay anymore, and then they're forced out of their homes. They're forced.
You know what else we can't do? Which kids do? If you steal $10 million, I can't say, well, Ryan stole $10 million. They say, well, arrest him too. But you know what in politics they do? If Clinton steals $10 million, they go, well, Bush stole $10 million. And everyone says, yeah, Bush stole $10 million. They don't care that Clinton stole $10 million. All they care about is they can say the other guy did. But that's not a defense for me to say, hey, yeah, I stole $10 million, but Ryan stole $10 million. And people would say, okay, I'll arrest him too.
Yeah, it is. I mean, it's exactly the way
politicians, they love to make people deny what their guy did, not by denying what they did, by pointing to something else equally bad or worse that someone else did.
Yeah.
And if you look at the media, they never, ever, ever follow up on that question. They don't hold that politician to task for what they've done. As long as they bring up, well, the other guy did it, they say, oh, yeah, okay, well, he did it too. Because that interviewer knows that if they continue to push the question and ask a follow-up question, we're not talking about the other guy, we're talking about you and why you stole the $10 million, they won't be invited back to have an interview.
No. And you know what they'll typically say? If somebody does push the issue, they'll just say, I'm not going to talk about that at this time. Right?
Yes, and if you ask another question, you're being unseemly. How dare you ask a woman or a Republican or a Democrat, whoever the person is, that type of question? You're not allowed to ask those questions.
Right.
She was kind enough. She was kind enough to offer you this interview, Ryan, and you have to ask her about her stealing $10 million. Where's your sense of decorum?
It's just like if all of a sudden Janet Yellen went and gave an interview on one of these major news stations or something like that. She's going to get she'll have all the questions ahead of time to look at. She's going to cross out the ones she doesn't want to answer.
Are they going to ask her on Wednesday, Ryan, about who's buying all these bonds in Belgium?
No, absolutely.
What would she say? Oh, we don't like to comment on that.
They think it's a good investment. I don't know. Who knows?
It came out of nowhere. $150 billion worth of Treasuries being bought by somebody who happens to be buying the same amount that you stopped buying, or even more, to cover for the amount that Russia was selling.
There's one thing for sure that I do know. They would not let you and I in there to ask questions. They would not let us in there.
I don't want to ask this question.
They wouldn't, because our questions would make too much sense, and they'd be like, well, where did this crazy kook come from, right? Like, he's talking about stuff with, what do you mean? The stock market's up? You know what I mean? Interest rates are low. Home prices are up. Everything's looking good. What is he talking about, all this negativity, And
a lot of people would defend that. You see, the other thing is it's who they are. People don't listen to what's being said or what's being asked. They listen to who's asking it and who's answering the question. And if you have built in kind of the Wizard of Oz that you are the authority, you can say a bunch of nonsense. And if a person's asking totally sensible and perhaps intelligent questions, but they have no credibility because no one knows who they are, then They could just be written off as wackos. And, that's the sign of human psychology. And I love the story of The Emperor's New Clothes. You got people sitting around because everyone else says the king has wonderful clothes on, even though he's naked. And it takes a child to point out that the guy's naked.
Right.
And you can get Yellen or any of these politicians up there talking and people nodding their heads, and they will accept an answer like, well, Obama did it, so that may, or Bush did it, and therefore that passes for an excuse. That passes for a retort of the argument against them. When if you and I did that, I said, well, Ryan did it. That wouldn't carry any water.
No, and every interpretation that the Fed has had of any economic, stat that's out there or numbers is glass half full, right?
They printed $4 trillion, which is in excess of the entire growth in the GDP in the 5 years, and somehow they can claim that's a success, and that they printed the money out of thin air, which all it did was enabled banks to get toxic assets off their balance sheet and enabled increased deficit financing of the U.S. debt. And all of a sudden, the debt's gone down. But no, the debt's gone down, but the overall amount of money that the United States owes continues to grow and grow, and that wouldn't be possible unless the Fed or someone in Belgium was buying these U.S. Treasury bonds that we're issuing.
Right. Yep. And it's the same as the stock market, right? The stock market, obviously, with all the public sector investments, these large investments, trillions of dollars, this is what's continuing to heat up the stock market more and more and more. And like you said, the stock market never has a losing day, right? It just continues to go up and up and up. Right. Just because more and more money gets pumped in there, because where else is it going to go? There's nowhere for it to go. And, at the end of the day, the Fed and United States, they look like gold right now, because guess what? It's not as bad here as it is everywhere else.
Yep.
And that's what they can stick to. They can stick to that. Look, Europe's got negative interest rates. They're going to have to do the same thing that we did for the last 5 years. We're coming out of that.
Look at us. We're responsible. Yeah. We have stopped the QE after 5 years.
Yep. We're gonna
we might even raise interest rates. We're so prudent.
But you know what they'll do? They'll talk about raising interest rates for the next year.
Just like they talked for 5 years about ending QE.
Right. Yeah. And the old saying, talk is cheap, but it's all we get.
Yeah. But in politics, talk is gold.
Yeah, because that's what's traded on every day, right?
Absolutely.
It's what comes out, and
in your personal life, talk is cheap, but in politics, that's the game.
Well, and it's definitely liquid, it's gold when it comes out of the Fed's mouth, because that's what, is literally, people will be hanging on the Fed's every last word.
As they should, Ryan. They control the market.
Yes, for Tuesday and Wednesday, we'll basically see that everything that will go on in the stock market and the mortgage-backed security market, treasury market, it's all hinged and predicated on what the Fed does. It says it starts and ends with them. And our economy is likely to continue doing that for the foreseeable future. We're coming up at the end of the show here, Louis, but I want to thank you again for coming on.
Thanks,
if you could give our listeners your blog again, so they can check out your weekly blog post. I really enjoy reading them, and I think they would too.
Oh, thank you, Ryan. It's smaugld.com, SMAULGLD, and this week we have a blog post on the happiness of nations and the happiness of people who own homes versus renting, and there's some interesting findings there on whether nations that are the richest have the highest home ownership rates or not. So please check that out at smaugld.com. Thanks, Ryan.
Great. Thanks, Louis. Appreciate it. And guys, make sure that you subscribe on iTunes to Real Estate 360. And share with any friends that you may feel may get some benefit out of listening to this weekly podcast. Like I said, we're going to give you, the news that you need to hear, not that you want to hear. And you can also stream our shows live on the website at Real Estate 360 Live. If you have any questions, on the right-hand side, there's an Ask a Question button for future podcasts. If there's anything that you'd like for us to cover in regards to real estate and the economy, let us know there. Until next time.